in listen-only mode.
Hello and welcome to today's Premium Account Market Update for October 2017. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances, and realise that not all investments are appropriate for every individual. Presented today, myself, Leon Hine, Managing Director of Investor Signals, have over 18 years of experience in the financial services industry as a licensed securities and derivatives advisor. The topics for today: we look at the macro update driving equities, we roll through the ASX top 50 stocks, we look at the FY18, FY19 earnings outlook, we tie that in with the technical trends, portfolio allocations and Australian market outlook. The premium account service is based on a model portfolio of ASX 50 stocks. We utilise call options to enhance portfolio returns. We're concentrated on effective ownership around ex-dividend dates, generating above average cash flow, capital growth, all in a strict investment mandate, and importantly, the assets remain in your name. If you'd like to know more about our service, please contact me on the 02 number or leon@investorsignals.com. Up on screen at the moment is a graph of the XJO, and the index has broken higher as a result of banks and resources predominantly rallying from their recent lows. The index has been tracking sideways since, and I'll just switch that to a daily. The index has been tracking sideways really since April this year and finding support around this 5630 level and pushing back up now to 5900 near resistance. The algorithm signals that we see on chart here, these green signals are buys at the bottom and the reds being sells at the top. To have a quick look at sort of the back test of these across the top 50 stocks, this return over time here shows the performance of a model portfolio of ASX 50 signals off the back of our algorithm engine, and what it shows is that on an annualized basis over a 7-year period, it delivers a time-weighted rate of return, or an annualized return, of 14.14%, which has significantly outperformed the underlying index. So let's go to the charts and just have a look at the basis of these algorithm engines, or algorithm signals I should say, and we'll tie that in with the top 50 stocks. So first of all, we come in here, we go on to watch list, we shift it over to the top 50 list, go back to the chart, and then start toggling through them. So AGLs, we've had an algorithm buy signal down here at around $23, and if we just jump into the model portfolio, I'll just show you quickly how this works. So looking at the top 50 model portfolio, we can see here, if we organise it alphabetically, we can see AGL had a buy signal on the 7th of the 6th, and currently we've been in the trade for 139 days. Another way to arrange this table, obviously I just arranged it alphabetically, is to arrange it by percentage gain or percentage loss. So the worst performing stock in the model at the moment is Fortescue, and then the best performing stock in the model at the moment is Aristocrat and Treasury Wines. Both of those are up substantial. Another way that I like to review the model portfolio is the days held, so the number of days since the stock was added to the model portfolio. Ramsay Healthcare is the most recent addition, Suncorp, Amcor, Qantas. So we can see there Qantas was added in July. It's up 22%. We've held it for 92 days. So just if I'm referring to the model, you understand what it is that I'm looking at there. So jumping back to the charts, AGL, let's have a look at this from a PE standpoint as well as a earnings growth. So AGL trades about 16 times earnings on a 4.5% dividend yield, growing earnings at about 12 to 13% over the next 12 months. We think that this stock's an okay buy right contributor to client portfolios. We've been waiting for it to pull back for quite some time. Aristocrat Leisure, if we have a look at the performance of the algo signals here on Aristocrat, and just to compress in a little more data, we can see there that we've had a series of buy signals and no sell signals. The reason that is the stock's making higher highs and higher lows. The most recent buy signal here at $20, the stock's now trading 23. Amcor, we had an algo buy signal down here at around 15. We're now pushing up towards $16. We like Amcor. It trades about 18 times earnings on a 4% dividend yield. We're looking for forward earnings growth of about 8%. Complement it with a covered call, and we're delivering 10 to 12% cash flow on an annualized basis from Amcor. AMP's recently been added into the model. We can see the algorithm buy signal down here at around $5. The stock's sitting at or near that level. Fairly benign earnings growth in AMP, I should say, probably only about 3 to 4%. EPS growth over the next 12 months, trading on about a 5.5% dividend yield, but a little bit of a turnaround story there as AMP delivers higher quality managed fund products. ANZ, so the Australian banking stocks, I think, are pushing up against resistance at the moment. We've had a bit of a short squeeze after the bank bashing in the media over the last few months. The market probably got caught a bit on the short side of these banks, and they're rallying higher coming into the upcoming dividends and their earnings result. You've got ANZ, NAB, and Macquarie providing earnings updates over the next week or so. But I guess not to lose sight of the fact that the banks are probably on average 10 to 20% lower than their highs made about 18 months or 2 years ago. So the trend is down in the banks, and we're probably likely to see a lower high structure. So I think my view is the banks either consolidate or move sideways in a good market, but there are some minor risks to the downside. Nevertheless, ANZ was added into the model at $27, so we've got a bit of buffer there with the stock 10% above where it was added into the model. APA's long algorithm buy signal here at around this $8 level. APA performs well when interest rates are likely to fall. It's a infrastructure stock trading on 5.25% dividend yield, delivering about 8 to 10% earnings growth, and that sits in the model, as does ASX. So we see this one here, higher highs, higher lows. I've chatted about ASX, if you've watched the recordings previously, at 23 times earnings and a 3.8% dividend yield. I think it's getting expensive. The interesting thing with the algo system, it will stay long the stock until such time as the price rolls over and makes lower lows and lower highs, and we'll come across a stock where I can talk a bit more about that in a moment. AZJ, we had an algo buy signal back here at around 430, which is probably fair value. We've traded out of AZJ in our client portfolios, but it still stays in our broader algorithm model portfolio, as it's still created a higher high and a higher low. The concern that I have from a fundamental standpoint with AZJ is it's 19 times earnings, 5.5% dividend yield, but they're paying out 100% of their earnings in dividends, and I think maybe in the near future we could see that dividend come under pressure. BHP, we had an algo buy signal down here at around $22. We've seen iron ore push from sort of $50 a tonne where it had consolidated up to into mid-60s at the moment, and that's provided the basis for both BHP and Rio to trade higher. To put some numbers on BHP, it trades about 15 times earnings and roughly a 4% dividend yield. Brambles, last week we saw at the AGM the CEO make comment that he thinks that the company can return to roughly about 6% annualized earnings growth. So on that basis, we have it trading 18 times earnings on just over a 3% dividend yield. But here's an example where the stock had been in an uptrend, started to break down, make lower lows, lower highs. The most recent algorithm signal was a short or a sell signal there at $10.50, but I suspect we're probably at a level where we start to find support. For clients that own Brambles, I think you want to complement it with a covered call at around $9.50 or $9.75 and turn that 3% dividend yield into 10 to 12% cash flow. Commonwealth Bank, lower lows, lower highs. We've got an algorithm sell signal here at $80. I think maybe 6 months out, Commonwealth's lower than where it is today. Computershare, I think this looks a little expensive to me. 19 times earnings, 2.6% dividend yield, and a patchy track record of earnings growth. CSL, we like this name. Certainly higher highs, higher lows. The algo signal's done a good job of picking up these entry levels. It's a core stock in the model portfolio, and it's delivered solid returns. The most recent signal was down here at around $120, now pushing up to $140. Caltex, just to put some numbers on this, it's 14 times earnings and a 3.5% dividend yield. Caltex really deliver pretty moderate earnings growth, somewhere around 3 to 5%. Dexus, just a flag that we've got an algo buy signal here at $9. Fortescue, so this has been added into the model as we looked at. It's probably the worst performing stock within the model portfolio. Interesting just to watch over the near term to see whether the price comes down and takes out that prior low, or we can find some support and trade a little bit higher. We'll revisit that in next month's recording. Goodman Group, so we had algo buy signals down here at around 650 and then again at 750. This stock's pretty expensive for a property trust, 18 times earnings on just over a 3% dividend yield. GPT we like, we hold this in client portfolios at 15 times earnings and a 5% dividend yield, growing underlying earnings about 4 or 5%. We had an algo buy signal here at around 470. At around 450, I think it's an opportunity. At around $5, I think it's worth looking at selling covered calls over GPT, which is what we've done in client portfolios. We've boosted that dividend yield from sort of 5% up to around 10 to 12% on an annualized basis. IAG, I think this is probably fully valued at the moment. We had an algo buy signal back here at 575. The stock's rallied up. It's filled this price gap that was left just here, and it looks to be running into a little bit of resistance at the moment. It's 17 times earnings and a 4.5% yield, maybe somewhere around 5 to 8% underlying earnings growth. I think it bumps along sideways, so again, you could look at selling calls over IAG. Incitec, we had a buy signal down here at lower levels. This is one that I flagged on the blog. And at around 380, I think it's full value short term. James Hardie, so I've got a algorithm sell signal here. Some of these building and material stocks, I think, just a little bit expensive, with James Hardie at 25 times earnings and a little under 3% dividend. I think it's pretty hard to justify the current price valuation, and I think that's a stock that I'm happy to sort of stay away from and maybe review from the short side of the market. Lendlease trading 12 times earnings, 4% dividend yield, maybe coming back to a support level there at around $16. Mirvac, we had an algo buy signal down here at $2, now trading $2.30. Medibank Private, this is one of our core holdings in client portfolios, albeit that we've just recently taken profit around this 310 to 315 level. So the reason there, at 20 times earnings and a 3.9% dividend yield, we think that the stock's pretty full value. The other alternative to taking profit on the stock is to sell a fairly tight covered call at or near this level and try to keep exposure to the March dividend and then pick up the extra income through the covered call. Macquarie reports its earnings on Friday. We'll reassess sort of where that growth sits, but I expect it to be pretty similar to last year. So on that basis, Macquarie's about 14 times earnings on a 5% dividend yield, and we've just had an algo signal there to suggest that we take profit and get out of Macquarie, so it's now been removed from the model. NAB, we had a buy signal down here at around $28, so we're still long this in the model portfolio. But as I mentioned earlier, I think the banks are getting pretty close to the top end of this rally. Newcrest, it's in a downtrend making. Well, look, let's step back and actually have a closer look at this. It's actually rallied back a fair way from $10, and now it's consolidated around this $20 level. From a longer term perspective, it's still in a downtrend. It was trading $40. Now it's sort of consolidating around 20. My expectation is that it probably continues to move sideways and then ultimately breaks to the upside through this level. However, right at the moment in the short term, we've had an algo sell signal here at around $24, and the stock just pushing a little bit lower right at the moment. Origin Energy, higher highs, higher lows. We're seeing Origin do some good things with selling off non-core assets. Their exploration assets they've pulled into a new structure and sold to Beach Petroleum, helping to reduce debt in Origin from almost $10 billion down to $7 billion, and at the same time the company's achieving good production numbers out of their Curtis Island LNG project. So Origin at the moment, we don't mind this stock. I think at $7.50 it's pretty much full value. So you can either take profit or sell covered sell covered calls. The most recent algo signal was at $6.80. Orica had an algorithm buy signal here at $17, now pushing up towards 20. Oil Search, we've got sell signal present there in Oil Search. Qantas, we had a buy signal here at around $5. The stock's now $6.50. QBE, we got sell signal here in QBE with downside pressure. Ramsay Healthcare, this is one that we've been holding in portfolios. We've just taken profit on it in the last day or two. Ramsay trades 23 times earnings on a 2.3% dividend yield. What concerns us here is that we think maybe it runs into resistance at around $67, $68. But it's a stock that longer term, over the next 2, 3, 4, 5 years, I think you can continue to revisit Ramsay as an opportunity in portfolios. to give you an idea, Ramsay should deliver underlying earnings at about 9%. Actually, just to jump back and provide a bit more detail here, the stock had been in an uptrend for quite some time, so it's not very often we see these retracements in the healthcare names. What's weighed on Ramsay is they've had slightly slower revenue growth out of their European and North American business. Australian private hospitals continue to do very well for them, but at 23 times earnings and a 2% dividend yield, I think there's a little more upside left in the rally, but not too much. Rio, we had a buy signal here in the Algo Engine when the stock made a higher high, retraced back, created the higher low at $56, and the stock's pushing up to around $70 at the moment. South 32, we had the Algo buy signal here at around $2.30. I have South 32 on 12 times earnings, 4% dividend yield. And Scentre Group, so this is our Westfield assets for Australia and New Zealand. As far as property trust goes, it's on 16 times earnings, roughly a 5.5% dividend yield and about 3 to 4% underlying earnings growth. So again, this is sensitive to interest rates. So if we see interest rates moving higher in America, we're likely to see this remain under pressure. If the markets start to pull back a little bit and discount or reduce the probability of consecutive interest rates rises in the US, we may start to see some of these defensive yield names do a little bit better. Stocklands, we're cautious on Stocklands. We're mindful that the Algo Engine's flagging the lower high structure here. The most recent signal's a sell signal, so we're not doing anything there in Stocklands, and it doesn't sit in the model. Sonic Healthcare, we like this name at 19 times earnings, just under a 4% dividend yield. The Algo Engine's given us a buy signal at around this $20 level. We think it can push a little bit higher, but again, it's a name, given that most of the market is very expensive at the moment and earnings growth is relatively moderate. I think there's a compelling argument that owning these blue chip stocks and complementing them with a covered call is the right way to approach the market at the moment. Santos, a number of analysts are upgrading Santos. It's not in the model at the moment, but I think over the next 1 to 3 years, the turnaround probably continues to take shape there with Santos. Suncorp, so we had an algorithm buy signal down here at lower levels. The stock's now pushing up to around $13.70. Just to put some numbers on Suncorp, it trades 15 times earnings on a 5.5% dividend yield, and they probably deliver about 8% earnings growth. Sydney Airports, we like this name, Sydney and Transurban. Sydney delivers just over 5% yield, Transurban around 4.5%, but we can see here the algorithm buy signal at lower levels there in Sydney Airports, and then likewise in Transurban, algo entry level there at around $11. Telstra, so this is a good example where the stock had been making higher highs, higher lows, started to roll over. We predominantly see the sell signals come in. The most recent was a sell signal at 5.30, and we still don't yet have the higher high and higher low pattern to confirm an entry level, albeit jumping back to Telstra, the CEO last week at the AGM confirmed that he thought that the 22-cent dividend is a floor, and it's unlikely that they're going to need to cut the dividend further. There is speculation that in 3 years' time, the $3 billion hole in revenues post-NBN may cause that to come under review again, albeit that I think we take the CEO's comments on face value at the moment, and we may get some reprieve over the next 2 or 3 years in the selling pressure that's occurred in Telstra, with the stock being on a 6.5% dividend yield. Treasury Wine, so this is one of the best performing stocks in the portfolio. The company's doing a terrific job growing underlying earnings at around 20%. We can see the algo buy signals here. The most recent one created an entry level at around $12. We stay long the stock in the model until such times it rolls over and creates lower lows and lower highs. Vicinity Centre was sell signal there at around $3. Westpac buy signal here at around $30. Westpac trades on about a 5.5% dividend yield. Wesfarmers, just to sort of break Wesfarmers down a little, Bunnings is growing about 10 to 12%. Coles is growing about 2%. They come out with their quarterly trading revenue update tomorrow. Woolworths comes out on the 31st, so they'll be interesting to have a look at those. Wesfarmers trades about 17 times earnings on just over a 5% dividend yield. I think if you're going to own this, you want to be complementing it with a covered call and boosting that cash flow up to 10 to 12%. Westfield, so lower lows, lower highs. The most recent signal was a sell here at around $8. I have Westfield trading about 18 times earnings on a 4.5% dividend yield. Woolworths, so we've seen this downtrend here end. The stock starts to create higher highs, higher lows. The algo signal created an initial buy there at around 22. And then we've got a subsequent buy signal here at around 24. I think that when we look at it from a valuation standpoint, at 20 times earnings and 3.5% dividend yield, the market's looking for around 10% earnings growth, should support roughly $1 of dividends over the next 12 months. I think the base case is that probably owning it here and selling call options at around 26.50, you start to turn that 3% dividend into 10 to 12% annualized cash flow. Woodside Petroleum is probably pretty close to a support level. I think there's a chance that oil price will sort of hold this $50 to $60 range, and I think in that environment maybe Woodside could start to push a little bit higher. Stop losses under that sort of $28 support level there needed. And finally, we'll just sort of finish on XJO. So just to recap, US equities trading at record highs, underpinned by expanding earnings. I think there's some issues for the US market around whether EPS, earnings per share growth, can continue to underpin valuations. Also, there's some question marks around the rate of financial engineering, share buybacks, central bank intervention. Does the US raise rates? Does the ECB pull back on stimulus? Does the US start to shrink their balance sheet? How do they go with the December debt ceiling that needs to be raised? So I think there's enough issues there where on balance you would have to say that the market should consolidate and probably move sideways, which again lends itself to an environment of selling covered calls. So just to conclude, so the algorithm engine, we're spending more time looking at this as a basis of our integrating with our investment advice and portfolio management. The statistics show that the algorithm engine is very effective and outperforms the market. If you would like to trial this, come onto our website, click on the free trial. You get a 30-day trial, and we'll work with you to step you through the way the technology and the algorithm engine works. And during that time, if you'd then like to have a chat about either using the technology and placing the trade yourself, or you'd like us to work in partnership with you where we place the orders, we'd be eager to have those discussions whilst you're on the 30-day trial. So please come to the website, click on there, and just follow the steps. Thank you for listening in.